Hi, everyone. My name is Tricia Rickard. I work with our practice growth and marketing team here at Jones Roth. I want to extend a really warm welcome to everyone. We're really glad you're here for today's session. And we're kicking off a new year of small business webinars and workshops for 2023, diving in today to talk about budgeting and managing cash flow. This is a really great opportunity to ask questions. So if you have a question, don't be shy. I want to encourage you to go ahead and submit your questions in the questions area of GoToWebinar. And I'll be keeping my eye on that throughout our session. We'll do two main sessions, one about halfway through and then again at the end. So please submit your questions. We'll also be asking you to give us some feedback. And so we'll have some questions for you, and you can either put those in the questions box or chat, whatever works for you. All right. Well, before we get started, just a short introduction to our firm. Founded in 1946, Jones Roth is one of the largest CPA and business advisory firms headquartered in Oregon. We have offices in Eugene, Bend, and Hillsboro. Over 100 team members, 50% of our partners are women, and 20% of our team members are remote right now. And our small business team specifically is a team of advisors who hold expert knowledge in small business accounting best practices. We work with clients who are small to mid-sized businesses. We provide business coaching, expert tax and accounting guidance, and employer support to help owners reach their professional and personal financial goals. And that's our team. With us today is Tricia Duncan. She's one of our firm's partners, and she started as a staff accountant in 1994. Today, her current focus is on small business advisory and people development. And her areas of expertise are vast, including assurance, tax and advisory, a variety of industry and service niches. She happens to be a U of O alum. She enjoys running marathons, CrossFit, hiking, travel, family, and volunteering. Tricia, welcome. Thank you so much for being with us today.
Yeah, thank you, Teresa, and thank you for everyone for joining us today as we kick off these roundtables for 2023. So today we're going to go through budgeting and cash flow. We're going to start with a little bit about you. Teresa already did the introduction about us. So after we get a little information about you and what you're hoping we cover today, we'll go through the budgeting process, how to integrate cash flow into that. Again, ask your questions in the question box as we go, but we'll stop a couple times for Q&As. And then we're going to want to get some feedback about future sessions. What would you like to see us do in the future? So let's start a little bit about you. If you could show in the chat what industries are here on the call today. Tell me a little bit about your business and what industry you're involved in. So I see mortgage and quiet, early childhood education, engineering, environmental. Awesome. So broad range of industries, restaurants and golf course, children's advocacy, so lots of industries. Anybody currently have a budget process or a budget in place? And again, if you want to use the chat for that, we can watch that. So some no's, some yeses across the board. All right. And any particular issue you were hoping we'd address today, other than just covering the overview of how to create a budget and a cash flow? All right. That helps us. So we'll get started. I think we'll cover those things. We've got a wide range of industries, like everyone can see. And so each industry is slightly different on maybe how you would budget or some of the components of the budget. So I'll try to address some of those as we go through. But let's start. What is a budget? So a budget can be very, very simple or very, very complex. But essentially, it's a plan to manage your finances And you want that budget to align with your goals and your strategic plans for the year. It should be a management tool that helps you make sure you can fund current commitments, future projects, that you can plan for any needs for additional money or capital for your business. But we always say if you don't plan, you're likely to fail, right? So you want to take the time to build the plan, the financial plan that aligns with your strategic plan or your operations plan or your sales plan. They all go together. And it's just a good start place for you to help manage your business. So a lot of people will say, well, is it worth my time and energy to budget? And we think it is. And I think a lot of people find it very useful. Again, it's very helpful to manage your money effectively. You know when you need to use credit, you know when you need to use your line of credit or borrow money, or manage your accounts receivable, your inventory, your accounts payable. It helps you really be thoughtful about how you allocate resources to projects by putting a thought and a roadmap in place. Gives you an opportunity to think through, why would I change what I'm doing, or there's a new opportunity that pops up, how does that fit in, and what would be impacted if I make a choice here or there. So it helps improve decision making. It should help you identify problems, especially financial problems, before they occur. Helps plan for the future, and for small business owners can help plan for their financial well-being as the individual or family. And the increased staff motivation, a lot of team members really like to know how they fit into the bigger picture of your organization, and understanding their components of the budget or the goals the organization has around the budget really helps give people something to work towards, which tends to increase staff motivation. All right, we see the budget process as a cyclical process. It's not something you just do right before the new year, right at the start of the year. It's something that should be beneficial to you and your management team and organization throughout the year. And it should be a living document. I don't see it as a static document. Now, there's some organizations where due to grant requirements or municipal requirements that you have to have a static budget for planning or reporting purposes. But from a management standpoint, having a fluid, adjustable budget helps you adapt and plan as things change. Over the last few years, we've all had to deal with big unexpected changes. And so if you have a budget in place, it lets you kind of stop, where are we at, what has changed, how do we move on? So all of the process will start with identifying what are your goals for the year, and then kind of breaking down the components. So what are the inflows, what revenues coming in, how are the sales teams expecting sales to look, how does the current market environment impact nonprofit donations, really considering those inflows, the financial resources that are coming to your organization, what's impacted there. Same with expense. We're going to go through all these in more detail. We'll go through expenses, other considerations, other things that could impact the finances, getting input from your team. So some people will be like, okay, controller, create the budget for my organization. But there's people that need to be involved, sales, program managers, department heads, that all have a plan on how they're going to operate that will impact the finances of the business. So it's a team effort. Once you kind of work through the first draft, focus on reviewing it, stepping back. Does the big picture that I have created make sense with what I'm trying to do with my business? Once, you might have to revisit some of those things. That might be a little circular. And then you're going to move on to using it as a living document. So I'm going to monitor that budget. Created the financial road plan. I need to check and make sure I'm still on the right road. Do I need to make a turn? Is something, the highway closed ahead, now we've got to shift. So it needs to be adjusted as there's significant changes along the way. So it should be something living, viewing, you're seeing all the time. So starting with your goals, a lot of people will start with their budget looking at what happened last year. And then how will this year be different than last year? So are there changes you're planning on making? Has the market changed? Your customer makeup changed? your competition doing something different? How do the industry trends or your key performance indicators, what are they showing you that might be different in the future? Are there problems you have to address this year? Is there equipment that's going to need to be replaced? Are you shifting the way you're organizing your organization and operational changes that might impact the finances? We're in an environment where pay rates are going up, benefits are getting more expensive. How does that impact your budget and your goals? And then what financial performance goals might you have? So we work a lot with small businesses. So we might have a business owner that says, I want to pay down my debt in the next 5 years. So that might be a goal of the budget and cash flow plan. How do we get debt to zero in 5 years before I sell or retire? It might be, I am setting the business up for sale and I want to make sure that the financials look really good. So that might be a financial performance goal that we need to incorporate into how we budget and operate the business. And then, are you going to be investing in the business? Will you have new owners, new investors? Are you going to have some capital that comes into the business? So really stepping back and saying, where were we and where are we trying to go? Who's involved? So often the budget will start with finance, right? They have all the financial data easy at their fingertips and they are a good place to start. But then pulling in operational team members, sales team members, management, department heads, program managers, owners, they all have a component of how they're operating the business will impact the finances. So finance might create the big picture, but they probably need to get input from those other areas. So be thoughtful about how do we help the sales team figure out what the revenues are going to look like next year? What information do I need to give them to help them figure that out? Same with operations, different department heads. Finance might help start the process, give a structure, give some historical information, kind of push a little bit on here's what I need from you and help them through that process. But you need that feedback to know, hey, sales is planning on changing to focus on this product line, which has a totally different impact on operations and finances. So the team needs to be involved to make sure this all makes sense in the end. All right, where to create a budget? We often get that question. A lot of accounting software will have budget components in there where you can input your budget right into the accounting software, makes reporting really easy, can be a great resource. If your accounting software doesn't do that, or some of them are really complex, and so maybe it's not the best for you right now, Excel works just fine. We're going to make sure you get an Excel document where we've got some samples of a simple, intermediate, advanced spreadsheet that's a starting place for budgeting and cash flow. And then we work a lot with LivePlan, which is a Eugene-based organization that's been around for a long time. It used to be called Business Plan Pro, and they've adjusted their tool over the years. So it's more of a planning and management tool. You can still write a business plan with it, but it has some great components for budgeting where you set up some assumptions, put some numbers in, and you can play a lot of what if cases. So what if sales went up 25%? What if the cost of people went up 15% or benefits increased? What if I can get my inventory turning more frequently or my accounts payable paid quicker? How will that affect my financial statements and my cash flow without having to create all the formulas? So it's pretty cost effective and a nice tool. It syncs with QuickBooks, so you can actually sync budget and actual that way if you're not running it through QuickBooks. So a nice tool with some nice dashboards and reporting that's built in that you can give out to your department heads, managers, owners. So something to look at there. But find the tool that's best for you. Like I said before, budgeting can be really complex or it can be really simple. The key is finding the budget that's going to be impactful for you and your organization that you can monitor and maintain. So if it's too complex, you might not want to deal with it. If it's too simple, you might not have all the information you need to make decisions. All right, and then how long should the budget be? Most people will do an annual budget, generally broken down into quarters or months. I like a rolling 12 to 18 month budget so that it's not really a big, robust, time-consuming project all at once, usually around year end, which is always a hard time for your finance people. So if you keep a rolling 12 to 18 months, and every quarter or so you're kind of adding on to it, you get to have a continuum, and it's constantly looking a little longer term, where those annual budgets, by the time you get to October, November, December, you're not seeing out as far as you need to see. So a lot of people will do annual with the months, and then maybe some rolling, and then maybe a longer term budget. So maybe next 5 years, 10 years at a big picture standpoint, big assumptions, big broad base. So up to you what's useful for your organization. How do your cycles work in your organization? That might impact how you decide to set up the budget. All right, so when you're creating a budget, there's all these pieces to the pie, starting with last year and then jumping into the sales component. And deciding how detailed you want the budget is important. So you can have just a pure sales number. Here's our revenue, one line item. Or depending on your organization, you might break it down into program revenue by type, or customer type, or product type. The cycles of times of the year might impact how your projected sales go. So be thoughtful about that. Again, I'd start simple, and then you can always add more details later. But generally, sales is a good place to start, or income. What are those cash inflows? So that could be grants or donations or things like that for nonprofits. Patient, I saw we had some healthcare on here, so insurance, reimbursements, things like that. And then jumping into the direct cost of sales. So if you're selling a product, what is the labor and materials for creating that product? For service businesses, what are the people involved in creating the revenue, and how do those change based on your assumptions for sales? So if sales goes up 10%, do your cost of sales go up 10%? And can you build some assumptions into your budgeting? So a lot of people will do that. They're trying to hit a gross profit of X%, and they will build that assumption into their spreadsheet or their budget document, so that as you change numbers, those other numbers that are variable in a kind of a direct way can change along the way. Then looking at things like fixed costs, so facilities, your rent, utilities, admin staff, insurance, property taxes, those things that are pretty fixed. What are those? And breaking those out into groups is pretty helpful. So like facilities, all the things that impact facilities, all the components of insurance, so that you can kind of see those as a % of sales can be useful as a management tool, and see how that changes, where those stair steps as you get bigger. General administrative expenses, so things like advertising and marketing, office expenses, your administrative team members, those sorts of things, considering how your operations and general admin changes as you grow or expand, as your sales change. What does that do to these other components? What's the market doing to those, right? So health insurance, insurance in general, those sorts of things. What's the market doing, and how does that impact it? When you're doing a maybe annual budget by each 12 months, I would look at when does that cash flow happen, right? So insurance, often you're paying your premiums once a year, and then it's so it's a big dollar amount in 1 month. Getting it into the correct month is helpful, so you can see what the actual cash flow will be when we get to that part. And then other things in your budget that don't really hit the income statement. What sort of purchases of property and equipment, or sales of your property and equipment, might be coming down the line? And what debt might you have, new debt or debt repayment, including lines of credit? So those sorts of things, how are those going to fit into the budget? I need to make sure I have cash flow for those down the road. All right, a little more things to consider with sales, breaking down that product or service type, the customer market. So some people look at regional sales or a customer type, government, private companies, individuals. How is the market pricing adjusting and adapting for your business? Are you going to need to increase the prices, having what if components of your budget help with that. So if I increase the price 10%, what do I expect that to mean in terms of quantity of sales, and then how does that impact the rest of my budget? What are you expecting for the future, right? We've all had issues with staffing issues, supply chain considerations, weird market adjustments to materials and products, and a lot of that's unpredictable, which is one of the reasons you want a live moving document, so you can say, okay, we're in the middle of COVID, prices went up 20% on what I'm purchasing. How does that impact my budget, my cash flow, and how I need to price down the road or tomorrow? So having this tool really helps you kind of make those decisions pretty quickly. In sales, other things to look at, looking at trends, your uncollectible accounts, is that growing? Are you seeing trends in that might change the way you want to offer your sales or your sales mix? How are your margins adapting? Does that indicate anything unusual or something you should be considering? Expenses, most people will just start with the prior year and then think through each component about what's different. What are the known changes? What are some strategic changes, some business decisions I'm making that will impact the different categories of expenses? Budgeting time is a good time to evaluate those categories. So a lot of us get in the habit of, like, we've always done this thing every year and it has a cost allocated to it. At some point, looking at that and saying, does that still make sense for us? We've always used that service or this technology. Are we still using it? Is it still useful for us? Does it still provide value? It's a good opportunity to kind of rethink that, maybe a rut you've been in with some of those components. Looking at variable and fixed costs, so that as you change sales, the variable are changing with it and fixed are staying the same. What's that sales plan and how does that impact things other than just the revenue? Do we need an additional salesperson, more administrative team members? We're going to operate a new facility. What does that look like? And again, staffing and benefits has been very fluid the last few years, hopefully settling down a little bit, but that can have big impacts. So are you planning for a potential market adjustment to your salaries, increase in benefits? Do you need to revisit your benefit package and adapt what that looks like based on how it's falling out in the budget? And then other things to consider, is there any property or equipment you're going to be purchasing? Are you going to have any new debt? Is there debt to be repaid? And how are your accounts receivable, accounts payable, and I'd also add inventory in there, how are those turns going? So in economic challenges, often you see your accounts receivable growing and it's not turning as fast and you're getting paid later and later, and that can have a huge impact to your cash flow. And how are you managing the accounts payable on the other end to match up? I've got to pay for this material, but I might not get it for 2 months and I'm not going to get paid for another month after that. So how do we manage those trends that we might be seeing? Same in inventory. How are we managing what we have to purchase to have in place when we're ready to sell it? And then are there other things? There could be a variety of other things that just will impact the finances of your business, and be thoughtful about that. Take some time to think about it. So once you've done all of that and you've got a starting draft to work from, you want to step back and say, okay, based on what I thought going in, what my plan is for the year for our organization, does this budget seem reasonable? Does it seem reasonable compared to my historical trends, our organization's historical trends over the last 3-5 years? How is it comparing to similar industries or other businesses like us? And is it matching up with what I expected when I got started, right? And so sometimes all of those are, yep, we're right on board, ready to go. Often there'll be things that, like, hey, that doesn't make sense. I need to go look at that a little deeper, or why is this not meeting my expectations? So build some review time in there. And then during that time, it's a good time to then say, do we want to look at a best case, worst case scenario? We might have our main budget, but we have the what ifs. So what if we did buy a subsidiary or build a new location or take on another grant? what would that look like? So having the opportunity to kind of tweak that budget and say, well, maybe I want to create a stretch budget that's like best case scenario, and that's our goal, but here's our reasonable one, right? So those can be really helpful. And then the budget's complete, right? You've done it. Now what are we going to do? We're going to use that as a management tool. So there needs to be ongoing monitoring. So again, like a live plan link. So if you created your budget and live plan, you can sync that with some accounting software and run some reports that show budget to actual. You can do that in your accounting software. You can do that in the Excel worksheets. But essentially, you've created this financial plan with your budget. Now we want to make sure we're on track. And if we're not on track, we want to adapt quickly. We want to anticipate things that might not be working well, right? So historical trends are good at looking, not in a crazy environment. So if the last few years have been really crazy financially for your organization with the pandemic, might be hard to look at those historical trends, but maybe you're looking back a little farther. So anything that pops up that like, hey, we might be heading a little off path, we should reassess and say, is there anything we should be doing differently? Do we need to tweak things? Has the environment changed? Has the market changed? And what does that impact our budget and finances for? And then from there, we'll start talking about how to take that budget and roll right into a cash flow analysis. But I'm going to pause a minute and see if we have any questions or thoughts. Those of you that are using budgets, any tips or tricks that you have used that have been very helpful for you, you can throw your thoughts in the chat.
I was just going to add that if anybody has specific questions, you can always feel free to email us as well if you don't feel comfortable sharing the details. But any general questions, please pop them into the questions box.
And it's okay if there's none. We'll move along.
Okay, great.
Yeah. All right, so cash flow is critical, right? We've all seen there's been a lot of businesses that have not made it through the pandemic, and I would guarantee most of them are due to a cash flow issue, right? So insufficient cash reserves to pay the bills when they're due, and you can only work through credit for so long before everything falls apart. So your business can be the greatest business, you can have the best services, the best products, but if we don't have the cash coming in when you need to pay your bills, you won't last very long. So a lot of small businesses don't have a cash flow plan, or they're kind of using their gut to manage their cash flow. If you're going to go through the budgeting process, there's some pretty simple ways you can add the cash flow plan to that. And again, you find the balance between simple to complex that works best for you. So do you just want a gut check, or do you want to fine tune to the detail? So we're going to talk through a few of those different options. Key requirements of cash flow are that it's positive and it's available and timely. So you have cash when you need it, and the inflows generally need to come in before the outflows are due, right? So sounds simple, but can get really complex if you have inventory and accounts receivable and accounts payable, and maybe you have insurance reimbursements that lag, or you're getting government grants that come in 2 or 3 months after you incur the expenses. So managing that can be very helpful. It helps you make decisions about when and how you purchase things or use your finances. So this is pretty simple, but inflows, generally sales or revenue, grants, things that you have done and you're receiving funds back for. Inflows are also things like customers paying down their accounts receivable. So you've essentially lent them money by letting them take your product or service and not paying right away, and then they pay it back to you later. Borrowings. So if I'm going to go purchase some equipment, I might go borrow the funds. That's an inflow. You might bring in a new owner. You might have an investor that brings in more capital to your organization, and you might sell property and equipment. So all of those are inflows. From an operating standpoint, you want a lot of that inflow to come from your sales or revenue functions. And then outflow, all your expenses, your property and equipment purchases, repayment of debts. And then a big one for small businesses, distribution to owners. Sometimes people don't really take that into account when they're looking at their cash flow. We like to show cash flow in more of a visual format. So if any of you have financial statements, there's a very formal, generally accepted accounting principle cash flow that's not very useful from a management standpoint. It's very technical and regulated on what and how things are presented. And it can get complicated when you have accounts receivable, inventory, accounts payable, other accrual type entries to really think through what's coming in and what's going out. So this graph essentially at the far left starts with the beginning of the year cash. So they were, I don't know if you guys can see my mouse, but they were about $30,000 of cash at the beginning of the year. And the first line goes up, and that's net income. So they went from about 30,000 to 55. So about $25,000 of net income. I have a little adjustment for depreciation because that's not a cash entry, but it impacted net income. So they're about up to 60 then. And then this organization, their accounts receivables went down. So they collected quite a bit of accounts receivable. So that is more money coming in the door. So when accounts receivable goes down, that's a positive cash flow. So they went from about 60 to 110. Then with some of that cash flow, they bought more inventory. So their inventory went up, and so cash went out. So back down to about 85. And then we've got some adjustments for some current assets that went down, so more money back into the business. And then we flip over to the liability side of your balance sheet and say, okay, accounts payable and other current liabilities went down, which means we paid off some debt, accounts payable, vendors, over time. And so that brought cash back down to a little over 60. We took out some loans, and that gave us more cash. And then that very last line over here that drops down, the owners took out some money. So they went from 90 to about 10. So they took out about $80,000 from the business over the course of the year. So ending about $10,000 in ending cash. So what I like about this is all of these lines are components that you can manage, right? We can manage how we deal with inventory purchases and turns. We can manage accounts receivable and what we allow people to pay on credit. We can manage when and how we pay our payables. We can manage how we purchase equipment and pay off loans. So all of those components are things we can manage to make sure we have positive cash flow down the road. So just an interesting way of looking at that. If anyone's really interested, I can show you how to create a quick little spreadsheet that will populate something like this for you. So incorporating cash flow into your budget. I'm going to start with a very simple approach. So maybe a service-based business that's cash basis. So money comes in from a service or a product that you sell, and then you're paying directly, not a lot of accounts receivable or accounts payable or inventory. So you're going to start with your budget, and then you're going to add to that net income some changes in maybe equipment purchases, debt transactions, to then get to a cash flow. So a very simple spreadsheet. This is a very simple budget, right? Just sales as a line item, cost of sales, gross profit, operating, general, administrative, to a net income of $7,500, and then just some basic things. So I need to pay off my line of credit. I've got some debt payments I need to make to come up with a change in cash. And so adding this to your budget is where you find these red areas, right? So you want to make sure your budget has the appropriate cycles in it. So if you have a cyclical nature to your work that impacts cash inflows and outflows, you want to reflect that in your monthly budget so that the cash flow is accurate. We set up the spreadsheet so it will pop up anytime there's a negative change in cash or ending cash, because that's an indication that we are going to have to figure something out that month. I need to plan for being negative 500 at the end of the month. So maybe that's changing how I'm paying off the line of credit. So maybe I paid too much off that month and I need to plan around that. Or I've got to figure out if there's operating expenses that can fit in other months. But it gives you a highlight pretty quickly of where might there be a cash flow issue and what can I do to plan for that. So this one's pretty simple. Cash basis, P&L, basic, add a couple items, and you'll get a gut check to your cash flow. Next phase would be adding a little more complexity with accruals, so accounts receivable, accounts payable, and inventory. But a similar concept, I did not include the budget, where we usually set it up like this for clients, so you can just input the numbers based on your trial balance or your financial statements for that month. So it essentially looks at your changes in those accruals, accounts receivable, inventory, prepaids, accounts payable, line of credit, financing. Start with, so you're just looking at the change when you're looking at those balance sheet accounts. So this one, the AR last period was 135, it's down to 120. And so they had inflows of 15,000. So a little more complex, but still gives you a pretty easy view of where am I going to have problems down the road. And again, we just usually set up a spreadsheet with highlights to show what you input and where they come from. So you can, and this is still a gut check, but it can be pretty simple and pretty easy to have your bookkeeper, controller set this up and help you run those cash flows through. I will say some businesses will even do their budget and their cash flow on a weekly or bi-weekly basis if your cycles are really fluctuating. And you can always drill down a little bit more if you need to. And then the most complex, the advanced one, will pick up all the balance sheet adjustments and deal a little bit more robustly with some of the other components. So this one's pretty robust with lots of different things in there to build it in. And these are the ones that the more advanced ones would tie out to your financial statements, because you would go through all the components of change in cash from month to month. And so that should balance to your balance sheet cash number. The simple one, the intermediate one, may or may not be exactly what your balance sheet says. So the ending cash might not say $7,000 in the end of January, beginning of February, but it's going to be close. So for you guys figuring out where do I start, I would start simple and then add as you're finding this isn't working, I need a little more nuance, or we have a lot more complications in our business. There's other components that could change. And so finding where you fit in here is a good place to start. You also kind of want to consider the cost benefit of it. So if you're utilizing this robustly and your industry or your organization is changing quite a bit and cash is really, really critical, being more detailed and spending more time is worth it. If things go pretty smoothly and there's not a lot of ups and downs, you probably can have more simple because it's not as critical. If you have a lot of cash reserves, if you have a lot of backup in your cash, it might not be as critical, but when you're tight, you might want more detail along the way. So essentially, this advanced one takes that visual and puts it into the graphic form. So you can take from that spreadsheet of the intermediate and create this, right? So if you're somebody on the finance team on the call, sometimes this visual is helpful to show your sales team or your owners or your board how the money's coming in and out in a more effective way than having a cash flow statement or a spreadsheet, because this can be very visual and can highlight where the decision points need to change or we need to consider. All right. So, questions. This is a great time for questions. We covered a lot pretty fast, and we have a wide variety of industries on the call, which will tweak how your budgets look, but happy to take some questions if you have some. Okay, I haven't seen any pop up. What we were hoping to do next, hopefully this was valuable to you, gave you some ideas and things to think about. We would like to do these roundtables more regularly, and we would love some input from you on maybe some topics that would be of interest. We've listed some that we've done in the past that have been beneficial to our clients and community members, and would love to know if there's specific topics that you find useful or helpful. So you can write that would be great if you can see that, do that in the chat. My chat just moving slowly, so I can't see it very well. I think I saw a question about, I think Teresa will be providing
Yes.
the PowerPoint slides and the spreadsheet to you.
Yes, that's right. We're going to send out a link to the recording and a link to the sample Excel spreadsheet.
Right. And so this is our first kickoff in a while. We haven't done these roundtables for a while, so any input would be helpful. So if you are in one of our 3 offices, do you have any interest of trying to do something like this in person? Do you like the webinar format? Are there topics that are helpful?
Looks like we have one topic that's come in here that someone has interest in reading and understanding financial statements.
Okay.
So
great.
We'll get that on our list.
Maybe I'll touch on some of these and then you might get done a little early. So SWOT analysis is looking at the strengths, weaknesses, opportunities, and threats of your organization. And that's a good exercise as you're planning for a year. Developing and using key performance indicators is looking at how you can take some of the measurements in your finances, your sales, and create indicators that will help you know if you're on the right track or not. Reading and understanding financial statements pretty clear. Minimizing the risk of fraud is looking at your internal controls and what can you do in a small business to minimize that risk. It's okay to be the boss is about managing your team and some tools and tricks there. We have a maximizing cash flow, which digs in a little bit more on the cash flow sides to how do you manage the components of your business to make sure that the positive cash flow is coming in. 4 ways to grow your business talks about some different areas to look at for business growth. Unique core differentiators are about who your organization is and why it's different from others and how do you communicate that to either your customers or the community or the people around you. We have a retirement plan group that helps set up retirement plans for our clients and organizations. And we find a lot of small businesses don't know that there's a variety of options there and it doesn't have to be super complicated. And then often we have owners that want to talk about the financial planning on their individual side and what that might look like. We've got some banking partners that work with us and come in and talk about tools that you can use at their banks that help you manage your business, have some banking security and resources that they have available. And then we work with some employment law attorneys to talk through some of the HR issues that are common in small business and how to kind of protect yourself from some of those risks along the way. So we appreciate you all being here. If you have any thoughts or feedback, we'd love to hear it. And we will let you know when we do our next one. Teresa, did you have anything else to add?
Yes, I was just going to add that we also are looking for some feedback in terms of maybe more specialized or one-on-one sessions for a chance to ask questions. So I think what we're talking about doing is putting together a little bit of a survey to just give you a chance to tell us where your interests are. And thank you to everybody who filled out, put something in the questions box, and we've got all of that here. But we're going to just be collecting info from this community. So feel free to look for an email from us and contribute your interest so that we can shape our presentations throughout the year. Yeah, so like I said before, you'll be getting an email with all the links. Thank you, Tricia, for taking the time to share your expertise with us today. We really appreciate it. And thanks to everybody who joined us. We hope you have a great afternoon, and we'll see you next time.